But I would like to introduce you guys to Nanette, who is our guest speaker today, who is going to be speaking about Sanford. And we're really lucky to have her. She's very, very familiar with the area. We'll get started. She's going to be talking about the different. Oh, I'm sorry. Thanks, Madison. Madison said I wasn't sharing the screen, so that's important. Okay, can you guys see my screen?
Yes.
Wonderful, thank you very much. Today we're going to be talking about the different hotspots in the Sanford area, a little bit about the history and growth of the area, the pros and the cons of Sanford. We've seen a lot of growth in Sanford in the last 10 years, a lot of growth. And it's become, a little city. It's still very affordable, and Nanette's going to talk a little bit about that. And we say in every week, shelter costs are rising. They're projecting another 8% rise in home prices through the end of the year. I was following our investment properties on Zillow, and they sort of went down a little bit in the spring of this year, and now they've surpassed what they were at the end of last year. I mean, not that Zillow is right, but it was just interesting to see that how the little blurb of the interest rates affected it for a second, and then things resolved and went back up. I'm sorry. Okay. Okay, so just trying to get this going a little bit. And then I just want to share with you guys that there's lots of ways that investors make money, okay? They don't just make money by the price of the house and what they sell it for in 5 years' time. That's a very simplistic way of looking at an investment. That's not really the complete way, okay? First of all, if you do improvements to the property, like every time that we flip a tenant in a house, like if a tenant has been in a house for 5 years, we are going to have to update that house. We're going to have to paint on the inside. Sometimes we have to update the flooring. Sometimes we put in like new vanities, new mirrors, new things in the shower, lighting. We do things like that. So those things add value to your property, okay? Sometimes people are able to buy properties, fix them up, and then flip them. Oftentimes when you do these flipped properties, the properties are in such bad shape that people have to pay cash for them because they're not financeable. If it's cosmetic, you can do it through the loan being financed, but that's where hard money lenders actually have a good value, is if you're buying a flip. You also pay down your principal every single month as part of your mortgage payment. You sort of take that for granted, but that pays down your loan. And then your property goes up in value and your loan balance goes down, and you make money that way. You make money through the fact that the tenant is going to cover the majority of your payment, and yet you are going to receive tax benefits. And eventually you'll have cash flow on properties. A really good way to have cash flow on properties now is if you live in a house, okay? You live in a house right now. Instead of buying a rental property, maybe what you could consider doing is renting the house that you have, and you go buy a new primary residence. If you go buy a new primary residence, you can get in with very little money. The interest rate will be better, the down payment will be better. And obviously this is not for everybody, but I have some clients that are doing this. And the reason why it works so well is because when they go to rent out their existing property, their mortgage payment on that property is very low because their interest rate is very low. So that's a way to circumvent the cash flow. In essence, real estate builds generational wealth. Like it's something that you can pass on to people. It's something that, for us, we don't have a pension at our job. So we use real estate and our investment properties as a way that, when we go to retire, we're going to have income on those properties because we don't have a pension. A lot of people don't. If you do not own a property, or you have friends that do not own a property, it is amazing how little a renter's net worth is. A renter's net worth, on average, the median tenant, like in a rental property, only has a net worth of $6,000. An average homeowner has net worth of over 40 times that. They have a net worth of $254,000. So it makes the difference between being have financial freedom somewhere down the line, or are you just going to pay your landlord's mortgage, right? I would like to tell you a little bit about Nanette. She's been in real estate over 20 years. She's been in North Carolina over 20 years, and she turned her first property turned her primary residence into investment property, exactly what I was talking about, when she lived in Delaware. She's been in several different types of businesses. She's also been a teaching assistant for her kids, she told me today. She's phenomenal with buyers, with sellers, with just real estate in general. She loves it. And I'm really, really pleased to have her on the call today. Nanette, thank you. I know you did a lot of work for this presentation, and I appreciate you being here.
Thank you for inviting me, Amy.
I'm going to just, if you don't mind, Nanette, I'm just going to just sort of like turn over this presentation to you and have you talk about our theme today, which is Sanford.
Thanks, Amy. And yes, I do want to go back to how you said before, you can definitely do like turning your own homes. I've done that twice and having a great success with that, making those into investments. So let's start out with Lee County, which Sanford is in. It was established in 1907. As you can see, it's kind of in the heart of North Carolina. We've seen great growth into the Wake County area, which we'll talk about how quickly you can get in and which highways for Sanford. It's a big Civil Revolutionary War kind of feel. This Lee County was named after Robert E. Lee, and I'll talk about Sanford, how that was also named after someone in the war. It kind of divides our plains up. We have the coastal, and then we have our mountain areas, and it's kind of the heart. You can get to so many places so quickly. They've had different industries that you can go, like the agricultural. We'll talk some about the Navy, and then some of the manufacturing plants that has Sanford in there. And just recently, Sanford is becoming one of those big growth areas. I think that's because it's very affordable, and we'll talk more about that. And you can buy affordable housing still in there. And as you can see, the population is still under 65, or it's around 65,000 employees. Okay.
Sorry.
So, no, that's okay. It's kind of like I kind of blend all of my talk together, so we'll just kind of keep going.
Okay, sorry.
No, you're all good. The history of Sanford, as you can see, it was incorporated in 1874, and it did play a big role back in our history of the Revolution and Civil War. You can go there today and check out several of the local landmarks to learn more about the history of Sanford in the past. And it did become a very big hub for our railroad system. That is a main area of where the whole railroad North Carolina system came out of. And Sanford was named after Colonel Charles Lee Sanford, who was a civil engineer, and he put together and developed the main railroads that now go in throughout and all of North Carolina. Now, you know, most of us say we don't really like the red clay here in North Carolina, but that's became a very good focal point in Sanford mixed with the sand, because they've become the brick capital of the U.S. There's only one or two, and Texas is the other one, where most of the bricks come out of even today. So it's a big industry. And then we have some of the other pharmaceutical companies like Pfizer, and then our big Caterpillar company, and Barrett Forge Aluminum, who makes all the wheel carriers. So we have some very, very big industries in Sanford alone, which you wouldn't think about it because it's such a small area, but it's allowing for people to come in, buy houses affordable, but still have that industry with them.
Yeah, that's good for jobs. And here's, you guys probably know where Sanford is. It's really accessible off of one. And this is great information that you put down here, Nanette.
Yeah, so you can see that Sanford is kind of a small hub outlying of the Wake County area. It's really easy to get in with US 1. It's 40 minutes from RTP. And if you look at some of the other places where we don't think that that this is the same, if you go to Willow Springs or even to Fuquay, it's almost the same distance into RTP because we can hit that US 1, but most people don't think of it that way. But it is really quick and you can get places quickly. It's only 45 minutes from downtown, 30 minutes from Apex, which it has a lot of businesses. Holly Springs, if you live in Sanford, but maybe you get a job at one of the new Fuji and Amgen companies, you're only 30 minutes in. So get affordable housing and then commute in. It's a great way to be it. You're 15 minutes from the new Moncure VinFast automotive manufacturing site. Get affordable housing and you pop into one of the major industries. So it's a great place all around. And you're only really 50 minutes out of Fayetteville. If you live in Fort Bragg, but you want to live off the base, this is a very good place and hub that you can go to as well.
I've had a few officers buy in Sanford and commute into Fayetteville.
Now, the Sanford is growing. It's also a good place for small, new entrepreneur businesses to start in. So here's some of the companies that are already in there. We've already talked about the Barefoot Forge, Gigi's Creations. They're a small catering company. So entrepreneurial companies can come in, find a good place to start. It's still affordable to come in there. A lot of new townhome developments, regular single family home developments are coming in. They're redeveloping their River Birch shopping center. And as it continues to grow, just like some of our areas where we saw in Wake County, like Clayton 7 years ago, there was nothing out there, but it became a booming place. This is like Sanford's going to be. It's a new way to come in quickly, but it's going to be booming. So if you come in at the start and start investing in here, you're just going to grow your businesses. Okay.
Oh, sorry.
Nope, that's okay. We kind of already touched on a lot of these already throughout the rest of the presentation. I've talked about the massive growth coming into Sanford. People are moving in, smaller businesses, because it's really affordable. They're proposing new housing developments, and you can still get in, and what we'll see in the next slides, you can still get in under 300K for really great homes. And here's one of them. So this is a new single family development. It is brand new construction. This is a 3-bedroom, 2.5 bath, just a little bit over 1,500 square feet, and it's going for under $300,000. So you can get affordable, you can get where they have the home warranties already there, bring in, and it's still affordable to invest in because it's 300,000. You don't want to do your investments too high or you won't get your return.
Yeah, the under 400 is a nice price point. That's a nice looking house.
This is a really cute house also. It's almost 1,500 square feet like before. It's a 3-bedroom, 2.5 bath with a 2-car garage. This home is only 2 minutes off of Highway US 1. So you can be anywhere between 30 and 40 minutes like we discussed before. It has no HOA, therefore you can probably turn it into, you still have to look at your covenants, an Airbnb possibly, and then, or you can do it as a really great rental investment.
Do you see more and more people doing Airbnbs?
I do. We see a lot of them turning to Airbnbs. You have to be very careful though. You have to look at the covenants because even in the older neighborhoods, we've come to find out that they have restrictions that say they have to be rented for 30 days or more, which takes you into your long-term rentals unless you can do something like a traveling nurses, which would be really great here as well because you have access into, Duke, UNC hospitals and those areas. I, sometimes Airbnbs take a little bit more to get started because you have to buy all your furnishings inside, but you can turn a profit into that pretty quickly once you get it up and running.
Interesting.
So this one you could kind of do either long-term, short-term investment for both of them.
Okay.
Cindy has a question in
Sure.
the chat. What is the name of the large subdivision that is going into the north of Sanford on US 1? She heard it's going to be a really large subdivision.
So there's a couple of them, and I'm not sure if she's talking about Galvin's Ridge or not, but I could actually, if I get her information, look that up for her and get that back in, with the information back to her.
Okay,
Cindy,
perfect.
do you know what builder it is, or you just heard that there's a subdivision going in?
I just heard from a client of mine that lives in Sanford that there's going to be a huge subdivision there.
Okay.
Okay. I know that
there's Adams Village and Ashby Village. There's if you look online, there's a lot going on there. Yeah.
I don't think it's started yet. I think it's just been approved.
Yeah, there's 6,000 family home lots. So that's quite a big subdivision, but yeah, I think Nanette can look into that for you. A lot of subdivisions do allow rental properties. You just they only allow a certain percentage to be rentals. So it's better to get in early.
Right.
But,
And then some builders you have to know, and most agents do, like DR Horton doesn't sell directly to investors. So it's one of those, like Galvin Ridge over there. I didn't put them on the list here because I know DR Horton usually does not allow, investors to buy upfront.
Yeah, then there's Watson Ridge. So there's a few different subdivisions that are on Google, and so I'm not sure which one it is that your friend was talking about, but there's several that are big subdivisions that are on Google. Here's another property.
So this is, yes, so this is another small town home property. I gave townhomes as well as single family homes. I just wanted to bring this one in because it was 250,000. You do have to look at what your HOA monthly fee is because that will bump up the price of it. Because it will cost a little bit more than regular single family home. But this one is affordable. This was also a 3-bedroom, 2.5 bath. And it was in a division that did allow you to rent and had rental communities in it. But as you can see, you can still get into the investments in Sanford at 250 for a 1,500 square foot townhome as well.
Yeah, that's really nice. So I know after working with you on several transactions, Nanette, can you tell me, I know that you have had very good luck getting your offers accepted when sometimes other agents don't. Can you go into this a little bit? Like, these are some things that we spoke about last week that help your buyers get their offer accepted. Can you go into them?
Absolutely. So the client we just had, which helped that she was already pre-approved when I talked to the listing agent. It does help to be pre-approved and not just pre-qualified because then I can say, here, our lender, speak with our lender. She's already halfway through the process. They have very little to do. All the paperwork is in, which makes it go so much smoother because there's no surprises to come out of it. Sometimes you get into it, people don't tell you everything factual, you don't have certain things. And so being pre-approved is definitely a key to a lot of things. You're going to want a clean offer. And what we call about a clean offer is a great offer price. You're not asking for home warranties. You're not asking for assistance. You're not asking for maybe washer and dryers unless it's already coming with the property. It's just, here's the money. Here's our due diligence. Let's close. So people like that because it's very simple for them and they don't have to look through a whole lot. Now, one key thing that I've found very important is calling the listing agent, because what's important to the seller is different for each transaction. The past one that we just did, the seller wanted to close in 30 days, but they wanted a 2-week rent back. So if I had just put in the 30 days, that didn't tell, and it didn't say, look, I didn't care about what you wanted. I just put in what I thought it was going to be good for the offer. So calling the agent, because sometimes people want a 45-day close or they want something else specific. We had one client that the family was very family oriented. It was an estate sale. The kids had written a letter from their, about their parents and everything that was important. And I know love letters aren't important, but our clients decided, since the sellers had done a love letter and told all importance about their home, so our clients wrote a letter and kind of sent it back in and said why they loved the home, how they wanted to grow their kids in the home like the other parents did. So you
That's
have
awesome.
to kind of feel out what the seller wants, and it helps. You want a considerable due diligence, and we've saw that in the markets, coming up. We don't need to see the $100,000 in there, but you still need to make sure it's significant.
Thank goodness.
A lot of times a quick close does really help, especially if the home is already vacant or if the person has been building and now that they need their house on the market and sold quickly to meet their timelines. And like we talked before, very few contingencies. We're not asking for anything on the offer. And then the last one is, yes, to make sure it's close to their listing price or at least a very strong offer.
Right, based on like you said, what the property is worth.
Correct.
So when you do get pre-approved, we do review all of your financial information. You might not have everything perfect, like you might not have your cash to close, or you might be in the process of paying down a debt, or I spoke with a client this morning, we have to actually refinance and consolidate their debt in order for them to buy a new primary residence so that they qualify. But we pre-approve you subject to these items. And we actually get you a real loan approval where this actually goes through underwriting. And that is much, much better for you to get your offer accepted than just a pre-qualification. A lot of times the credit unions are doing pre-qualifications, and I hear all the time, every week, about deals falling through because people were not pre-approved. And that's sad to lose that due diligence money. Sometimes I hear people talking about, well, I'll just wait for interest rates to come down. But when interest rates come down, there's going to be a lot more people that come out of the woodwork to buy homes. And so I wanted to ask you, Nanette, what is your take on the market in the next year or two? What do you feel is going to happen with the housing market prices?
I think they're going to continue to go up. So before COVID and before the whole crazy market and interest rates went down to 2%, we were seeing a 5 to 8% growth in most areas. I don't see that softening now. We are still very low inventory. We are back into multiple offers in certain circumstances. Yes, have home prices kind of evened out a little bit? Some, but as you said, if interest rates go down at all, we're going to be back in the same situation that we were before, considering we're seeing multiple offers. And I'm not just talking in the low price range already. We're talking about in the $600,000, $700,000 price ranges. So I would buy now. And I personally did this myself. The interest rates weren't low when I bought in January. I bought the rate. Hopefully they'll be able to refinance. But our industry, because of all the development, because of all the new industries coming in, we are not going to see a decline in the market. If interest rates go down, like you said, it's going to go back into the same situation we were before. So if anybody's looking to invest, I would do it now.
We would do, we've done a few of these Monday webinars, and there's not been one expert I've had on that said that the market is doing anything but going up here. I mean, there may be other parts of the country, so I just thought I'd share that with you. And, this is where when you take just a little bit of a risk, and I mean risk, it's not really a big risk, but that you're not, you're dealing with the interest rates as what they are right now, not what they were a few years ago. And I really don't think that they're going to come down that low. I don't think that they're going to come down that low again in my lifetime. But it is possible, of course, but that was just very weird, whole, melding of different circumstances. When there's not a whole bunch of people out like banging down the doors on a property, and there is, like we said, a lot of demand and very little supply, but you're going into a little bit quieter time of year. Interest rates are what they are. They're probably going to get hiked again before they start lowering them. They may not hike them this week, but they're planning on hiking them again. At least that's what they've said. This is where you can actually make money when people are not in droves out there. Like in 2008, you were telling me this morning that you were working someplace different in 2008 because of the turn in the market. If you look at this chart, you can see that in every recession, which is one of these dark columns, home prices have not gone down with the exception of 2008. And in 2008, the reason that they went down is because the inventory was over 4 times what it is right now. So there was over 4 million homes on the market in 2008, 9, 10. And right now, the truth is there's only 1 million. And out of those, 40% of them are already under contract. So very few homes are on the market. And that's why you don't have this housing bubble happening right now. And it's not going to happen because there's just not enough demand. I mean, there's not enough supply to meet the demand. And that's why home prices are forecast to still rise. Like the client I met with this morning, she only owes $81,000 on her house. She has a lot of equity, hundreds of thousands of dollars in her house. She also has a rental property. We took her first mortgage, her second mortgage, her rental property mortgage, and a few little debts, which weren't many. And we added those up together. And right now, her outlay on all of these little things, like the first mortgage, the second mortgage, the rental property, is $3,600 a month. If she refinances, pays off the first mortgage, the second mortgage, the rental property, and these little debts, her payment drops down to $1,900 a month. And that's if we take out $100,000 on top of the debt, and she can use that $100,000 towards buying another property. Like that's what her plan is. So even though she's getting rid of lower interest rate loans, the cash flow on those loans that she has, because they're retired, they have a pension and Social Security, they're on a fixed income, they can't qualify to buy another primary residence unless we consolidate the debt. So it's always good to look at your primary home first before you move out, before you turn it into a rental property, to see, you're not really marrying the interest rate, right? You're just dating the rate. What you pay for a house, you can't really change that, but you definitely can change the rate in the future, and you will when rates go down. When you are buying investment property, we have some people that self-manage their properties. Like my husband manages all of our rental properties. That's his job. He loves it. We have other people that are hiring property managers to manage their properties. They don't want to manage them. They don't want to. They don't even know how to. They're paying between 8 and 10% a month, and they're fine with that so that they don't have to find the tenant and deal with any issues with the tenant. And if you need help finding a property manager, we may be able to refer you over to some people. There is a brand new program that just came out a few weeks ago. If you are buying a primary residence, and you do not have to be a first-time home buyer to get this program. You can buy a primary residence. This is not made up, with 1% down payment. It's actually a 3% program. You are going to put down 1%, and we are going to get you the other 2%. So you're actually putting 3% down. That 2% is completely forgivable. It's literally a grant, and you can do a loan without mortgage insurance, and it saves in your monthly payment. This is for a primary residence. The only catch is that, you can't buy a property over 350. So it's going to limit where you can buy, what you can buy, But if you're buying a primary residence, there are some phenomenal programs. You can literally buy a house with 1% down with no mortgage insurance. If you are a first-time buyer or you have friends that have not bought, this is a phenomenal program. In 2008, it was offered in 5 counties in North Carolina. It's offered in all 100 right now. They get money for their down payment. What I love about this program is they get a below market interest rate by about 0.5% below the market without paying a whole bunch of points. It's a great program for first-time buyers, and we do these and a whole bunch of other programs. So if you have questions, we don't have a time limit today. I'm going to give you both Nanette's and my information. You can reach out to either one of us. Nanette, did I miss anything?
No, I don't think so. You did a really great job. Thank you for covering all those programs.
My pleasure. Thanks for covering everything. Madison, is there anything in the chat that we need to chat about?
Cindy has a question on whether or not there's an income limit. And I think,
Yes.
Cindy, were you referring to the 1% program?
Yes, I was.
Yeah, Cindy, on a lot of these programs, there's income limit based on the county. If you want to email me the counties that you're interested in or that your clients are interested in, you can email me at amy@amybonus.com and I'll get you all the information. But if you were to be making, $500,000 a year, these types of programs like the 15K and USDA and 1% without MI, they will not be for those levels of income. But yeah,
Sure.
just email me and I'll give you the little breakdown and chart of the different counties.
I have somebody that makes, I think, 75 or 80, and that's where I wasn't sure if that was too high. So that
Nope,
was the
it's not.
question.
It's probably not too high. It just depends on the county.
Okay, thank you.
Yeah, in Wake County, it's higher than that.
Okay.
Yeah, it's a really good program. Nanette, thank you. I
Thank you.
appreciate everybody being on the call. And I also want to let everybody know that next week, we're going to have Irina Bennett. I've been working with her for 2 decades now. She's another phenomenal speaker. She's going to be talking about Siler City and Mebane. Those are also areas that have seen a lot of growth. Sanford is really a great place to invest. I have had many clients invest there, not just first-time buyers, but investors. And you can even get a little piece of, land with your property. So, Nanette, thank you. Thank you, everybody. And if we don't have any other questions, I wish you guys a wonderful day and a wonderful week.
Thank you, Amy.
Thank you.
Thank you, everybody.